The rental housing market in Canada significantly impacts individuals, communities, and the broader economy in our country. As per the 2021 census, there were 5 million renter households, which means roughly 1/3 of Canadians are renters. CMHC's rental market report provides in-depth analysis for major centres across Canada. It provides the most comprehensive analysis and insights into the primary and secondary rental markets. Hello and welcome. My name is Charles Soriol, and I'm pleased to be hosting this discussion on the results of CMHC's 2024 rental market report. Joining me today is our Deputy Chief Economist, Kevin Hughes. Kevin, bonjour and welcome.
Thank you.
So let's start with the numbers. 1.5% national vacancy rate. 8% year-over-year rent increases across Canada. These are significant. These are impactful numbers. Can you walk us through a little bit to what this all means in the broader picture for renters?
Yes, of course. Now, they are staggering, but they should be in no way surprising. And we have been, as you know, we have an annual report, and we have been giving our assessment of this market for many decades. And in recent history, we've been pointing to many factors converging to very strong demand and supply that is growing but not as fast. And this year is 2023 was no exception. So it's staggering, but it shouldn't be a surprise. And you're right. I mean, the vacancy rate is very low. We have demand that is coming from several sources. So there is, for example, the affordability question. So people, can afford a rental lodging more than they can afford a home or house rather. And so that's one source of demand. Then you have the whole demographic picture, which is yes, immigration on one hand, but it's also the natural increase. So you see, we have an age pyramid in Canada, and it's normal for younger people to then leave their family and then try and seek rental lodging when they have jobs. Job market has been relatively favorable for that. So you have demand coming from several sources. And I would also add in the demographic side is that we have an aging population in Canada, and you're seeing Canadians who are owners and downsizing and also seeking rental lodging because it's more appropriate for their needs. So it's coming from many sources. Now, on the supply side, we have seen some increases, but certainly not to the measure that would be necessary to keep things stable or to have, let's say, a more balanced situation.
And how does that? So we're looking at this, and we're building supply, but it's not meeting demand. And how does that overall impact affordability? Can you expand on that?
Well, insofar as incomes are not growing at the same rate as some, you alluded to, the general average, but in some cities it's actually much higher than 8%.
Right.
So these are very, that in itself is the general context, and we see it also, in the arrears rate, which has also gone up, which is the percentage of people who are behind in their rent. So that's also another indicator as well, and of course, the affordability issue impacts people who are already renters, who have to face, an increase in their existing rent, but also people who are new to the rental market as well.
Right.
And they're facing, much steeper rental rates for units that's just been turned over, vacant rates.
Okay. And so if we could quickly look at the major markets, what do you see there happening? What are the dynamics of those, let's say the big six, or any highlights of these big six markets?
So, when you look at the vacancy rates according to the major markets last year, which is, you had, some that were 2%, 3%, exceptionally 1 or 2, maybe it was closer to 4. Now it's between, across the board, it's more around 1 to 2%, and several are below 1% in some of those big cities. Right. And so what's going on is, you're seeing what I was talking about before, several of these rental pressures that are converging, especially in the major centers. That's where the problem is the most acute, actually. It doesn't mean that it hasn't touched population centers of lower population, but it's especially touching the major centers.
Mostly the major centers. Other markets are also feeling the crunch.
And I mean, I think and just maybe to elaborate on that, it's especially there that, because of the numbers.
Right.
But it's happening across Canada. And, as economists, we always want to distinguish, especially housing economists, between national numbers that can sometimes hide, regional differences.
Right.
In this case, things are much more uniform, so it's happening not just in the big centers,
Right.
but also elsewhere. But it's just obviously, especially acute there.
And we talk about a balanced rental market, this 3%. Is that something that markets should be thriving for?
Well, 3% is like, the historical average of the vacancy rent. So if you say that, on average things go back and forth around the equilibrium point, 3% is a reference point. But, what happens too is that when markets stay at a very low rate, people say, okay, well, I can't afford to move in this city, and so they look elsewhere. And so the research on this topic is that the equilibrium rate is not necessarily the same technically from center to center, and it also changes in time.
Right.
So 3% is like a historical benchmark, but there are differences. And right now, the equilibrium point is kind of definitely seeing a lot of stresses. And
right. Because we're really not seeing that 3% in some of these markets.
And one of the indications is when you're not at equilibrium, you see those rents. Especially in tight markets, which is what we're seeing in Canada,
right.
You're seeing the rents go up significantly, which is what's happening.
And if someone turns over a rental unit, which we've talked about in the past,
right?
Some of that data. So can you talk a bit more about that aspect?
Right. So for the longest of times, we have published the total average rent and compared that from the previous year.
Correct.
And I'd say about 10 years ago, we started to look at what we call the same sample rent to eliminate compositional effects and to say, okay, if you took the same sample last year, compare those units to this year, what's the difference? And we generated that one. And then we went further to say, well, okay, that's also occupied units. What if we look at just units that have just been turned over
right.
and that are vacant? Because when you're new to the market, those are the units that you're going to be looking, not occupied units, obviously. And so there we see quite a big difference. It's not surprising because, in a lot of cases, rents will move more gradually, in the case of occupied units, because owners and tenants say, like, if they have a renter, who's timely in their payments, that they like that better than, having to turn over a unit, because
right.
turning over a unit there are costs for an owner as well. So when, let's say, for example, a unit hasn't been turned over in 10 years and then suddenly it becomes vacant, well, it's going to go at the going rate, right? Like any good, right? And so that's where we see that very big difference.
And then you see in different markets that the rate of turnover varies. How do you explain that, where a market where Ottawa would have a specific turnover rate which would be quite significantly different from another market?
Right, it's a good question. We started looking at it last year. It's a measure that's only been in our survey for a few years now. So I'd say that we're still looking at trying to interpret this as carefully and exactly as we can. There's a few explanations that we could look at. One is, for example, in a given year, for example, if our sample of turned over units, happen to be held previously for a very long period, that would explain that that group has a much higher rate, as opposed to, let's say, the sample in another city where a lot of that they were just turned over, more recently. Then it'll be closer to the going. So it will be it won't be as different as the non-turnover rent. So that the duration of occupancy has an impact. Another area we're looking at is the impact of rent controls in cities where there are rent controls. So obviously rent controls in the short run, is seen as an insurance for renters, so that their rent doesn't go up. So in the short run, that is definitely, a benefit for them.
Right.
However, as time goes by and those rent increases are only incremental, when the unit does become vacant,
Right.
then then you see that the big difference there. So
Right.
that's another explanation. But I'd say that we're continuing to look at that. But there's no doubt that there are big differences, and there are big differences in some cities. In some of the cities, it's maybe less than 10% difference. Others, it's more pronounced.
And how do you explain that? How do you explain that?
Well, again, it can be the duration of the occupancy. It could be we've seen like last year's results that there was quite a correlation between the centers where the difference was large and those where they had rent controls. It is somewhat the same this year, but there are some exceptions. So that other explanation that I was talking about, that is that the sample is comprised of units that hadn't been turned over for a long period.
a while.
That could be playing as well. So
Correct.
I think you have to be careful, but we're looking at it for sure. But what we need to remember as a bottom line here is that if you're new to the rental market and you're comparing the rents that you're facing as a new renter compared to the market, people who are, there's a big difference.
We talk about renters, but what does it also mean for rental apartment owners? Can you share some of those insights as well?
Well, rental apartment owners, landlords have always been very interested in this report to compare themselves as to what's going on, in their city, in their zones, because we have information that goes all the way to the neighborhood level. So it's important for them for their operations. And I think getting back to the question of the turnover rent, I think if you take an example of someone wanting to sell their car, they're going to sell their car at the going rate, and I think that is also the case for owners. They are this is their livelihood for many people or their business, and it's normal that occurs. I think that the impacts obviously on renters of the present situation is extremely important because it affects so many people. You said it yourself, the amount of renters in Canada has increased quite a lot in the last decade. So owners are part of the solution, for supply increase in Canada. So, we definitely need the private sector to be participating here. This is the major actor in this, and I think that the challenge going forward is going to be to have the incentives. Sufficient incentives for the private sector to be interested into entering the market, but also having the safeguards for renters for them to be able to simply afford the rent, and that is, I think, which is the really difficult nut to crack at the moment.
Right. So looking at this report overall, so what can we expect down the road? What this is an annual publication that takes a few months to produce. The survey is being done in October. We're releasing it today in January. We see others reporting on rental data. So where do we see this report going down the road?
Well, as I mentioned before, we've already about 10 years ago started to look at this survey in depth and to say where are the blind spots basically, and we've started. I think we have many more affordability measures in the report. I encourage people to look at those measures as well. I think where we're trying to go maybe is look at alternative measures of the rental market that are between surveys, so maybe a higher frequency.
Right.
Looking at more very precise measures, and also I would say as the survey continues with these new measures, is to gain and acquire, I'd say, a good basis for interpreting the results, especially that we talked about the turnover rate as well. I think that's something that it's early days for us. We have some some paths, some analytical paths, but that's something definitely we're going to be looking at. And also, we didn't talk about the secondary market, but the condominiums that are rented. I mean, that's another market that is extremely tight.
Right.
And in some cases in the country, it used to be the case that a rented condominium unit was much more expensive than a traditional rental market. In some markets in Canada, it's nearly the same. So that's another indication how tight the market is. So it's looking broad, but also looking more in depth. I'd say those two things, and maybe increasing the frequency. But as you mentioned, it's a big report. It's a costly report, but a very necessary one for sure.
Absolutely. So thank you again for taking the time to providing your insights and your knowledge and sharing these results with us. And thank you to our viewers. We want to hear from you. Feel free to leave a comment with your feedback on this discussion. And stay tuned for more conversations with our housing experts, and be sure to subscribe to our newsletters and our YouTube channel. And be sure to follow us on Twitter, X, LinkedIn, and all of our social platforms. Thank you and have a great day.